Welcome back. I'm Pratap here. Today is 20th March 2024. In this video, let us evaluate Bank Nifty, and also we will generate supply demand zone chain for Bank Nifty. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos are available in the playlist Supply Demand Zone Price Action course at our NeoStock YouTube channel. Even I have provided the link to this playlist in this YouTube video description. If you click the link, you will get into this page. And then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action course. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we release a new YouTube video, we will provide an update in that channel. Now let's get into the analysis of Bank Nifty as per the supply demand zone chain generated in our yesterday's report. So yesterday I have given you some exercises and also I told you some important points. Here we have a 15 minutes high liquidity zone which we fine-tuned to 5 minutes demand zone. We got an entry yesterday and I told you this zone will be violated because it is no more a fine-tuned zone, is no more a fresh zone, the fine-tune, and institutions did not create any new 5 minute zone inside this area. This zone will be violated. That is what I told you in our yesterday's video. So this zone is violated because we all already learned in our lesson 16 when a zone will be violated. That's why we predicted yesterday. So no more this 15 minutes high liquidity zone now. And also I told you yesterday, even this zone will be violated. Why? This is not a high liquidity zone, but this is a fine-tuned zone inside the daily demand zone. What is fine-tuned zone? Inside daily, we identified a 75-minute zone. Inside 75 minutes, we identified a 15-minute zone. Inside 15 minutes, we identified a 5-minute zone. That is the order flow. And that way, we got an entry earlier here in this zone. This is the real institutional order flow. That means this zone is tested. The fine-tuned zone is tested. Once a fine-tuned zone is tested, it is not guaranteed next time. There are higher chances that this zone will be violated. That is what happened today. This zone is violated. See here, the zone prices came and the zone is violated. But earlier we took a trade here. It gave a very good move up to here. It gave a very good move. So that is the reason why now the ranges are changed. Before I delete this zone, something I should tell you, because this is the exercise I gave you yesterday. What is that I told you? If you are expecting any trade within this daily zone, below this area, below this 75 minutes fine-tuned 5 minutes area, identify any new order flow is there inside. How? Below this, if there is any 75 minute zone, in that 15 minute zone, in that 5 minute zone, you can take an entry. That is what I told you yesterday. I told you, you people should do that exercise. If you would have done that, today, see the move from here to here. It has given 760 points profit from here to here. From this entry, 5 minutes fine-tuned. You may ask a question. Where is that 5 minute zone? That is the exercise I gave you yesterday. You are supposed to do. Now I will show you. Otherwise, where is the learning? Because below we need to identify. Until the below one we draw, I will keep this. After that, I will delete this. The previous fine-tuned zone. This is the previous fine-tuned zone. First, let me keep that time being previous fine-tuned zone. This is the 5 minute zone. This entire zone is daily area. Because the daily zone can have multiple order flows. This is the first order flow, we got the entry. This is below second order flow, today we got the entry. Actually, there is order flow. That is the exercise I have given to you. Okay, how do we do that? First we will go to this. Anyway, this is the daily zone. Inside we should identify 75 minutes. So let me go to 75 minutes time frame. So in this daily demand zone, is there any 75 minute zone? Yes, we have a ERC candle as a leg candle. After that we have a base candle. Then you can draw like this. This could be your 75 minute zone, because already this is there. For minimize the risk, I have drawn, because the candle has come out and follow through candles. That way I am considering, because previously I told you sometimes I draw some zones with compromise. Why? Because I will see the order flow, how exactly the price action is took place. Even though this is not a great leg out, there are follow through candles. That's why I limited. If you have any questions, you can draw a zone like this also. In this already the order flow is consumed. That's why the below we need to find the order flow. That is the reason why what I did, I have drawn zone like this. Came just below. But anyway, here we have a leg candle is here. If you want to compromise, you can still consider this is a leg out candle. It's a compromised leg out. But after that, you should have a good follow through. This is the way also you can draw the zones. But if you are an experienced person, then only you do this. Otherwise, don't do experiments. Unnecessarily, you will get into trouble. Anyway, this is fine tuning. Our main goal is to identify the real order flow at 5 minute zone. So what kind of zone it is? This is a 75 minute zone. This is a 75 minute zone. Inside this 75 minute zone, is there any 15 minute zone we should identify? So I am changing the time frame to 15 minutes. This is below this 5 minute zone. We have a 15 minutes. This is the 15 minute zone that we have drawn inside 75 minutes. Now we have to identify 15 minute zone. This is the daily zone. Inside daily, this is the 15 minute zone. We have to identify. See here, you have a rally candle. 1, 2, 3, 4, 5 base candles and a rally candle. You should not consider this order flow because it is part of the zone. This is the 15 minute zone. Let me give a dark color, a little dark. This 15 minute zone is inside 75 minute zone. This 75 minute zone is inside daily zone. Fine tuning. This is the fine tuning zone technique. This is what I explained you in lesson 16. Within this 15 minutes area, you should identify a 5 minute zone. So I am changing to the time for 5 minutes time frame. See here we have a nice leg out. Here you have a base candles. This is one base candle, another base candle, third base candle, fourth base candle. This can be treated as a ERC candle. Why? Because see the range of this candle. It's a very big range. We can say double the size of all these base candles. Definitely this is a ERC candle. This is your leg candle. Leg-in. ERC candles can be used as a leg-in candles. That is what I explained in your training program. Next we have 1, 2, 3, 4 base candles. Now you draw your 5 minute zone. Demand zone. This is a fine-tuned 5 minutes demand zone. How this fine-tuned 5 minutes demand zone is inside this 5 minute zone. This 5-minute zone is inside this entire 75-minute zone. This entire thing is 75. This 75-minute zone is in this entire daily demand zone. That is called fine tuning. Let me tell you again. This is the entire thing is daily. Inside daily we have drawn this 75 from here to here. Inside this 75 here we have drawn 15-minute zone. Inside 15-minute zone here we have drawn this fine-tuned 5-minute zone. And this is our real institutional order flow. This is the area you need to plan your trade, especially when you plan during intradays, intraday trading. They have a strong order flows. Previously, exactly the same way we fine-tuned this zone. This is the 5-minute zone. We fine-tuned. This 5-minute zone is inside 15-minute zone. That 15 minutes is inside another 75. That means this daily is having two 75-minute zones. This is the first 75. There is one more 75 we deleted sometime before. And that 75. We have two 75s. In both the 75s we have 15-minute zones. In both those 15 minutes we have 5-minute zones. This is one 5-minute zone, fine-tuned. This is the fine-tuned zone. And this is the one we fine-tuned. Now let me delete the remaining all. Only fine-tuned zones will remain now on the chart. This entire thing is daily. This daily is overlapped with high liquidity 75 minutes. Actually, this is the origin behind creation of this daily zone. And how we are trading this as per our normal supply demand zone price action course. These are all not high liquidity zones. Your normal supply demand zone price action concepts. Now these zones will work. Okay, here we already got a trade. The only reason why we are giving importance to this daily zone is it is originated from high liquidity zone. That's why we are giving importance to this demand zone. And moreover, we are planning only intraday trades. See, this daily demand zone is already tested. That's why this 5-minute zone, inside the daily, this fine-tuned 5-minute zone is already tested. That's why today it is violated. We already learned when a zone will be violated. Accordingly, this is violated. So now no more valid. Let us delete. And this is the exercise you are supposed to do. This is what I clearly told you in our yesterday's video. I am giving you exercise. You have to do this exercise. If anything you find, you plan a trade. That is what I told you. If you would have fine-tuned, today you would have got a trade here. This is your entry. From here to here, it has given you 760 points move. It would have been a very good profit for you. Okay, fine. What happened here? The zone is slightly pierced. Slightly, the distal line. Just 2 points below this distal line. So it is within your stop loss buffer only. Hope all you people are aware of stop loss buffer. This is the concept I already explained in lesson 19, stop loss buffers. And also every day stop loss buffers also I am giving you. I don't know how many of you people are aware. In case if you are not aware, every day I am generating stop loss buffers. All the Nifty, Bank Nifty, few other important indices. That is a financial Nifty, Fin Nifty and mid cap Nifty. We have 4 stocks you can trade. 4 indices you can trade in F&O segment. Apart from that, equity stocks. And few indices also included. Total 17 indices I included. But in that 4 are part of F&O trades. And remaining equity stocks in F&O. For all those stocks, every day I am generating stop buffers. That is what I explained you in the last lesson. For the last 3 days I don't know you are aware or not. In case if you are not aware, make use of that. They are available. Let me show you our main strategy builder. Because stop buffers are based on ATR. See here, if I click Nifty 50 stop buffers, we have Nifty Bank stop buffers, Nifty Financial Services and Nifty Mid Cap. All these 4 are part of our F&O trades. Apart from that, remaining equity stocks from 18 onwards. Remaining all are sectors, sectorial indices. See here you have this 3% ATR is for your intraday trading point of view. You can use it for 5 minutes or you can use it for 3 minutes demand or supply zones, these values. In case 3% is little higher, you can use 2% also. And this 5% ATR you can use it for DIT trades. This 10% ATR you can use for weekly income trades, swing trades. This 15% ATR is for monthly income trades. So you can refer where I am providing these reports every day. Stocks near demand and supply zones, I am generating a report. In that report, at the end of the video, this report is available. Even I am also generating 2 more reports. One is monthly income trade and weekly income trade, bullish, bearish trade setups. I am generating with the help of. In that video also, end of the video it is available. And third video is from this week I am generating, from this Monday onwards. That is short-term income trades. That is a DIT trade and HIT trade. Hourly income trades are mainly for intraday point of view. In both the videos I am generating. In that video also, at the end of the video, this report is available. So every day make use of these values and set these stop buffers, and accordingly you plan your trades. See, today if you would have exited exactly at our digital line, your order would have been stopped out. But this is within stop buffer. How much value? For Bank Nifty? 19.18. That means you need to round up the value. Round means upside. So it is going to be 20 points. Or if you want to round up to paisa level, 19.20 paisa. That way also you can do round up. So if Nifty is down by, from your digital line, if it is down by 20 points, still you can hold the price stock. But Nifty is down only 2 points. That means it is exactly within our stop buffer area. We are in the trade. Finally, our trade gave you 760 points profit. So from here, it reached the next zone. And here you would have taken another entry. Why here? The reason is Nifty high liquidity zones, one of the properties is they have the ability to create new zones within the same zone. So Nifty has created another new zone. Here you see, we have a rally within the zone area, 1, 2, 3, 4, 5 base candles and again a drop. That way, you would have drawn a zone like this. Another supply zone. See, today price is entered and reached. After that again it pushed. Even if you would not have drawn, still some entry buffer you would have added. For taking your entry, some buffer you would have added, at least 0.1%. 0.1 means it is a 46,000 means, so around 46 points before the trade you would have taken. That way also your trade would have been executed. And moreover, this is more perfect trade. See, the 5 minutes high liquidity, a new demand zone. This is how generally happens in high liquidity zones. So earlier also see rally, base and drop. And from this, these orders are picked up. And today from this area, these orders are picked up. So here already you got 760 points profit. If you would have taken another trade here, you would have got another 440 points up to this candle. Here we have a supply zone, rally base. It's not a great leg out, but I'm just telling you. Even if you exit here, probably you would have got another 400 points profit. If you consider rally, 1, 2, 3, 4 base candles and a rally, if you would have drawn, another 400 points profit you would have got. But from here to here, it has given 440 points move. Definitely you would have captured 400 points profit. So this is a 750 points and this is 400 points. See how much profit you would have got. So total 1150 points move you would have captured during the intraday. And all these things are based on your high liquidity zones and fine tuning the zone. Moreover, I gave you this exercise yesterday. I told you people do the fine tuning, because the previous video I explained how to fine tune. Probably Monday's video I think I explained. This is the trade, we got it on, yes, Monday we got this trade. Monday I explained fine tuning the zone. Please refer Monday's video. I clearly explained how to fine tune the zone. That's why today I gave you the exercise. If you would have listened my yesterday's video properly, today you would have got excellent 2 trades. This is a long trade and this is a short trade during the intraday. You would have got 1250 points profit you would have got. So anyway, this is about now Nifty. Next time you can't take you can't take a trade here. The reason is this is violated, but again a new zone is created. Drop, base, maybe this also you can consider as a base candle, and this is a leg out. This is not a base candle, this is a medium size leg candle. Medium size leg candle can be part of the base, if there are earlier base candles. Please remember. That way both the candles combine and you can draw a zone. Or if you want to minimize the risk, from here you can take and you can draw the zone. Once prices enter, you will get the trade. Otherwise, if they turn from here, you will miss the trade. That is possible. But this zone is violated, no more valid. Because a new zone is created, this is going to be a valid fine tuning the zone. This is a valid demand zone. Because this is inside 15 minutes zone. That 15 minutes is inside 75 minutes. That's why this is automatically fine tuned. If you feel risk is high, you can plan like this also. Maybe it may support one more trade, or it will violate and next get into the high liquidity zone below. That possibility is also there. But at this point of time, this is the one enabled. This range is enabled, active. And if this is violated any reason, the next active zone is going to be from here to here. If this is violates. But tomorrow this is the range. In case if tomorrow upside is violated, this will be the new range. See how many times this 5-minute zone is supported us. Several tests it has given. Is it going to give on tomorrow? We don't know. Maybe it may give or it might be violated. Anything will happen. But is it compulsory it will violate? That we won't tell. We can't tell. Because this is a 5-minute high liquidity zone. It is having capability to support multiple trades. Case if this is violated, you can go. But anyway, this you can't plan trade here because it is already tested. Now let me remove. But a new zone, so anything created today we will add into the list. We forgot to do that. So 15 minutes onwards we will check, because 25 minutes I verified, no zones are available today. 15 minutes onwards are available. So in 15 minutes, here 9th demand zone, immediate demand zone. This is already old one we have drawn on the chart. This one is created today, high liquidity zone. Again, a new high liquidity zone, but this is a 15-minute zone. When it is created on 23, 1 o'clock candle. Actually, it is showing 3 candles. The reason is I have in the software for 15 minutes and 5 minutes I have given a huge range. That is the reason why it is showing, but actually it is 2 candles only. Because last time also a leg candle it's shown as a base candle, leg out candle. I verified. The reason is purposefully I have given a huge range for 15 and 5 minutes. The reason is we need more profits. So that is the reason why I have given huge ranges. So that's why sometimes the candles that display as a leg out candles to you, Here it will be part of the zone sometimes. That anyway, manually we can make the changes. Because intraday, if you don't find huge ranges, we won't get the good profits. That's why I configured software only for 15 minutes and 5 minutes, like that. So let's go to the 15 minutes. And here is the one. Rally, base candles, drop, drop, drop. This is a 15 minutes high liquidity zone. So 15 minutes high liquidity supply zone. This is a zone created today. That means now ranges will change. These ranges will change now. So let me delete them for time being. After that we will add again. So this is the only one zone is created. But according to the software, this candle is also part of the zone, 15 minute zone. And the next one completely coming out of the zone and follow through candles. And now let us look into the next one, 5 minutes time frame, changing to the 5 minutes. And any zones are created today. 18th we have immediate demand zone. This is created today. It's a normal demand zone. And 17, 16 and 17, two supply zones are created today. 16th is a normal supply zone. 17th is a high liquidity zone. And already tested also once. When it is created today at 13:55 candle, after that 4 base candles. 13:55. Let me go to 5 minutes. Yeah, this is the 13:55 candle. 1, 2, 3, 4. These 4 it considered as a base candles and a drop candle. Because the reason is in 15 minutes and 5 minutes, I'm looking for a huge base candles, or the base candles should completely come out of the zone. This is a 5 minutes high liquidity supply zone. Actually, this can be considered like this. Anyway, it's a drop holding the prices from here already entered. And tomorrow maybe one more deep entry we may get, we don't know. But one point you have to understand, this is very close to the demand zone. But we don't know this demand zone, how long it will hold, because supply is... See here, institutions, how they are building the supply. Supply, 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 supply. And they are and they are coming very... and they are coming very close to the demand zone. What happens? Demand is not building up. The new demand they are not adding. New supply keep on they are adding. When you are seeing all these supplies, what is the point that will come to your mind? Definitely one of these supplies, maybe this one or this one, one of these supplies will completely consume the existing demand, and that way this daily demand zone will be violated. After that, the next high liquidity fine-tune these demand zones inside this 75, it will hold, it may give another entry. After that, that will also violate, and finally prices will get into the next level zones. Here we have 25-minute zones, 125-minute zones, and finally the next. So weekly area it will enter. See, below weekly area is there. Inside a weekly we have a daily high liquidity. Probably this could be the target for these news, all the supplies to violate and enter into the weekly area. But anyway, there's some more time is there. Definitely not this week to get into the weekly area unless something wrong happens. That means the supply become very strong, demand is weakened. Maybe tomorrow, day after tomorrow, huge fall in Bank Nifty, and then it may enter into weekly area. Except that one possibility, maybe this week it takes some time because already high liquidities are here. All these high liquidities should be violated. That means institutions further build more high liquidities before this. Okay, fine. Then what could be the range for tomorrow? You have newly created fine-tuned zone. This is the fine-tuned zone, newly created within the existing 15 minutes, the one we fine-tuned earlier. So I can say this is a fine-tuned five minutes demand zone. Five-minute demand zone in daily demand zone. Remember, this daily demand zone is a normal demand zone at present. Because this 5 minutes demand zone is continuously testing several times, we don't know. It can be converted to high liquidity zones, but we don't know that because software other conditions also should met, because the software will be evaluating several conditions to qualify that as a high liquidity. But one immediate criteria could be several tests are happening. That way it might consider, that possibility is there. This 5 minutes demand, this normal demand zone may be changed to high liquidity demand zone in the coming days. If it keep continuing, the reason is institutions are creating new zones again inside this. They are not letting this demand zone violate. The reason is, the main reason is this daily demand zone, the origin is from this 75 minutes high liquidity demand zone. That's why they are giving importance to this daily demand zone. If the origin is not from this high liquidity demand zone, definitely by this time this daily demand zone would have been violated. But let us see. Timing, if you ask me, supply is looking much stronger than demand. But it doesn't mean supply will dominate. We never know. Institutions may add new order, buy order flows here, new orders. Many times we ignore that point. New order flows. Existing order flow is okay. You should also think from new order flows. See, this is a new order flow. This fine-tuned 5 minutes demand zone is a new order flow. Today institutions added this 5 minute zone. Where they added? In the fine-tuned area they added. If they are added outside the fine-tuned area, it may not be having much importance. Because it is there in the fine-tuned area, because I deleted all those fine-tuned zones to bring clarity. But don't forget, because I already shown you earlier in this video. So this is created exactly in the fine-tuned area. So that's why this automatically this will become fine-tuned demand zone, but a fresh demand zone. At least one entry it may support. May support. There is no guarantee. Sometimes if the supply is very strong, this will be violated. Always we have to accept the risk. Otherwise we can't trade anything. But the only point is, before closing, it picked up the orders from this 5 minutes high liquidity supply zone. There are two possibilities. Possibility 1, with gap down Nifty, Bank Nifty should come down, or once again from this 5 minutes high liquidity supply zone, it should pick up the orders and come down. Of course, third possibility is also there. All of a sudden tomorrow could be a very positive day for the market. With the gap up, this high liquidity zone might be violated. That possibility is also there. And finally, prices may enter into this newly created 15 minutes zone. But this 15 minutes zone should be fine tuned with but I didn't see proper structure. This we may consider. We have a base candle. This way you can draw supply zone. 5 minute supply zone we can draw. You may ask a question, why software is not identified in this 5 minute zone? Because the leg out is not great. Software is strict. As a human, experienced people, sometimes we compromise and draw the zones. But software can't compromise. That's why it did not identify this zone. Because this is not a valid leg out for the software point of view. It expects even bigger leg out. So this is about Bank Nifty, and the ranges could be, tomorrow's ranges could be, the first range could be from here to here. Let me draw info line. This could be one range, valid for tomorrow, this range. Next range also valid for tomorrow. If this is violated, this could be the range. If the 5 minutes high liquidity zone violates, then only this will be the range. If this fine-tuned zone is violated, then what will be the range? This will be the range. Assume this 5 minutes HLQ zone is valid, but this is, oh my God, making mistakes. Yeah. This could be the new range, because these are the high liquidity zones. But this 5 minutes HLQ zone is the strongly holding for several days. If this is also violates, it might support. But anyway, you have to see, it's all depending on the order flow, tomorrow's order flow. How strong the market tomorrow, whether bull side or bear side. Based on that, some of these zones will be violated. Or without any violations, maybe tomorrow it may move here itself, within this fine-tuned 5 minutes demand zone and 5 minutes high liquidity supply zone. There only it can move. That possibility is also there. But you may get immediate trade opportunities in these zones. These are the immediate trade opportunities. Okay. Hope this information will be useful to you. Let us all meet again in our next video. Thank you.